U.S. stocks lost early momentum to end mostly lower Friday as investors digested a hectic week of mixed earnings and economic data that seemed to support the higher for longer interest rate scenario. The Dow fell more than 1%, the S&P 500 gave back half of 1%, and the Nasdaq rose nearly 0.4%. All three indexes notched weekly losses. Contigo Global Head of Applied Research Melissa Brown blames it on the dour mood of investors and traders.
Good earnings news, the stocks get hammered. Bad earnings news, stocks get hammered. Um, the I think it's all a result of basically sentiment being negative. And so any news, unless it's really good, is going to tend to be punished.
The Commerce Department's hotly anticipated personal consumption expenditures report showed inflation gradually cooling down as expected, getting closer to the Federal Reserve's 2% annual target, while consumer spending, which accounts for about 70% of the U.S. economy, posted a robust upside surprise. The Fed is expected to leave interest rates unchanged at its policy meeting next week. Meanwhile, about half of the companies in the S&P 500 have reported quarterly earnings with nearly 80% topping expectations. That includes chipmaker Intel, which jumped 9% Friday. But Ford plunged 12% after it withdrew its full-year forecast due to uncertainty over the pending ratification of its deal with the United Auto Workers Union. It also warned of continued pressure on electric vehicles.